trends and structural breaks. Now, these three basic market movements are comprised of 4 swing points. Now, before I get onto that, let's identify these 3 basic market movements. One, we have a bullish sentiment, which is referred to as an uptrend. It's when price is printing a series of higher highs and higher lows. And then we have a ranging market. Is when price is printing equal highs, equal lows. Essentially, you can call it support and resistance levels. Support and resistance levels. Is when price is just doesn't really have a direction, it's just moving sideways. A bearish sentiment, referred to as a downtrend, is when price is printing a series of lower highs and lower lows. So like I said, these basic market movements are comprised of 4 key swing points: higher highs, higher lows, and lower highs. Now, if you aren't already familiarized by these key swing points, I'm going to go through them with you. So in an uptrend scenario, this would be our lower high, right? So when price pulls back and then impulses, it closes above that recently created lower high, therefore creating a higher high. Now, same thing that goes for the lows. This was our lower low, essentially the lowest phase of the move over to the upside. But when price impulses and pulls back, it closes above that low, therefore printing a higher low. Does that sort of make sense? Now, and again, for a downtrend, this would have been the highest point, which is the higher high. Price impulse is down, creating a higher low, pulls back, but closes below that higher high, therefore leaving us a lower high, and then so on. Price impulses, closes below this low, therefore creating a lower low. Now, if I just show you an example on GU, right over here, we can clearly see price is printing a series of higher highs and higher lows, right? So as we can see here, this was a lower high, then we have a lower low. Price impulses over to the upside, closing above this lower high over here, therefore printing a new higher high. When price then pulls back, it fails to close below this low, therefore creating a higher low. And then price impulses over to the upside, closing above this higher high, therefore creating an even higher high. And then so on. And then this is an example of a downtrend. Price creates a higher high, impulses over to the downside, creating a lower low. Price then pulls back, fails to close above that higher high, leaving us a lower high, and then carries on his impulsive move to the downside, breaking below this lower low, creating an even lower low. Now, break of structure. All right. By using basic principles shown in the recent slides of the basic market movements, you can accurately determine where the buyers and sellers are gaining strength or weakness within the market. So as we can see here, price is printing a series of higher highs and higher lows, referred to as an uptrend. But what happens when price fails to maintain its upside presence and actually closes below that recently created higher low? When we identify something like this, this shows us that the sellers are now coming into power, potentially signaling to us that the market wants to now shift direction over to the downside. Same thing for a downtrend. When price is creating a series of lower highs and lower lows, and price then breaks above the recently created lower high, that shows us the buyers are now coming into power, potentially shifting the direction of the market. So now if I go on GU again and show you an example of this taking place. So as we identified earlier, we noticed that price over here was in an uptrend, right? Creating higher highs, higher lows. But notice this, once we create that higher high, price pulled back and created a higher low, right? Because it failed to close below this higher low. But then once it started to move upwards, it then failed to close above this higher high, which then creates a lower high. And then the move after this lower high closes below that recent higher low. This therefore now prints a lower low. Now once we identify this break of structure, we now know that the market wants to shift direction. And as we can see here, once we got that break of structure, market was now moving over, shifts its direction over to the downside. But then look what happens here. So we now know over at this point over here we're in a downtrend, right? Because price is creating lower highs and lower lows. But notice what happens here. So this was our recently created lower high. When price moves over to the downside, it failed to create a lower low. It failed to close below this low. But then what did it do? It impulsed above that recent lower high, therefore printing a new higher high. This is then what we identify as a break of structure. So now we now know that the buyers are coming into power. So now once we got that break of structure, what do we see now? Prices printing higher highs, higher lows. Now if I just zoom into this area over here, we identified that we were in an uptrend, but now at this point over here, what does this look like to you? A ranging market. Price is simply creating equal highs and equal lows. When you have a scenario like this, I personally stay away from the charts until I get a break of structure to either the upside or to the downside. Once I get that break of structure, that's when I start to look for buy or sell opportunities. Trend reversals. Now I'll be taking you guys through break of structures with signals towards a continuation in trend. So as you can see right over here, price is clearly printing higher highs and higher lows. Now, how do you know price is continuing its move to the upside? Once price creates that new higher high and prints that higher low, and then it impulses above that recently created higher high, that is identified as a break of structure. But this is identified as a break of structure which signals a continuation in trend, because it shows that price is still, the buyers are still in power, as none of the lows were broken, only the highs were broken, which allows us to look for opportunities to buy into the market. So as you can see over here, we had that break of structure, right? Price then pulls back. I haven't been through all the block or supply and demand trading with you guys yet, but as you can see here, once we got that break of structure, price then pulls back, doesn't close below this low, but then mitigates this demand zone right over here. We got a nice reaction, price moves over to the upside, and then we got that break of structure. Once we got that break of structure, price pulls back into this demand right over here, buys up again, pulls back, mitigates this 4-hour order block right over here, and then again break structures to the upside. So this is just identifying break of structures, which shows continuation in trend. But once price closes below this low over here, that's identified as a break of structure, which signals a trend reversal. So if I just show you guys an example on GU again, right over here. So alright, sweet. So once we identify that price broke structure, we can start to look for buying opportunities, right? So this was our recent lower high, lower low, price broke structure, pulls back, and it comes into this nice sell to buy candle right over here. Mitigates, moves over to the upside. Price creates a higher high, pulls back, creating a higher low, and as we can see here, clearly mitigating this 4-hour demand zone. Price then again breaks this structure, this structural high, pulls back, and mitigates this demand zone. Price then creates a higher high, and then so on. And then that's when we got that break of structure, right? No, okay, so before I get to that, so price created a higher high, pulls back. You would have entered at this demand zone right over here. Yes, you would have been in profit. You would have probably been targeting these highs because you haven't had a reason to target anything less, as price is still moving over to the downside. But then once price moved up, it then took you out and then broke structure because it broke that recent higher low. Once you got that break of structure, you then start to look for selling opportunities, right? So if I just zoom into this area over here, probably the 30-minute, we can find a nice entry point. As you can see over here, we have a nice supply zone at this point over here. Go back onto that 4-hour, extend that, and if we play price, so we've got that break of structure. We're now looking for selling opportunities. Price pulls back. There we go. We would have entered at this 30-minute supply zone right over here, and price would have moved over to the downside, continuing its bearish sentiment. Okay, so I hope that kind of makes sense for you guys. Okay, so over